Hey guys, welcome in. Can barely do that because of my calluses. Welcome in, I am the Crypto Bull God, and welcome into a much delayed Bitcoin, essentially the Bitcoin Crypto Weekly Close. If you're new here and you appreciate the content, make sure to hit the thumbs up button. I got my little clicker back. I have my office back. I gotta say, I'm very excited to be back in here. I really miss it. It's difficult when you're traveling and you're in different locations and you don't have your typical setup, but anywho, make sure to hit the thumbs up button, drop a comment, and subscribe to the channel. Typical with prior weekly closes here, what we're going to do is we're just going to look at a few key charts. I'm going to do things a little bit differently. I'm going to keep it to just a few key charts. Some charts we haven't looked at in a little bit. And then I'm going to leave plenty of time for Q&A. So you can ask me any technical analysis questions in the Q&A segment. Welcome in Ian and welcome in YC. And I appreciate the audience very much because without you guys, I wouldn't be doing this. So with that being said, real quick, before we actually get into things, I did want to apologize. I wanted to apologize because yesterday I was originally going to do this live stream and I had it scheduled for 7:45 Eastern Standard Time. I was doing some traveling. I was actually coming back from northern Florida back down to southern Florida, and it was just too tight a time frame to get things done. So that's why I rescheduled. Thank you for your patience in awaiting the live stream. So with that being said, let's get into it. So what I really wanted to do in today's live stream is I wanted to take a look at a few weekly closes, discuss what it is that I'm seeing. Not too much has changed, big picture. But I also wanted to be realistic, as I always do with you guys, and I wanted to speak to sort of my expectations and what the charts are saying in terms of expectations going into next year, okay? Going into 2023, what are some realistic expectations that we can have? So with that being said, let's jump into it. You know, the first chart that I want to take a look at here, okay? This is the Bitcoin weekly chart. And what I'm very simplistically showing, if you're not following me on Twitter, you need to give me a follow on Twitter because this is one of these charts that I've spoken to on Twitter. This is bullish divergence on the weekly. What I mean by that is when we had this candle that I thought was the bottoming candle back in June, our RSI was at 26. We are now sitting in an RSI of nearly 35, okay? So what's happening is the relative strength index, okay, is increasing, but yet price is decreasing. Statistically, we have a solid likelihood that this could result in a strong bounce up. Now, whether that's a dead cat bounce or whether that's the beginning of a true bullish rally and we begin building higher highs and higher lows, that has yet to be determined. No guarantee in anything in charting or in life. But this is positive to see. I like to see this taking place here on the weekly time frame. Especially the thing about bullish divergence is it holds more weight, it holds more gravity when you see bullish divergence playing out on the larger time frame. So it'd be one thing if we saw bullish divergence playing out on a 4-hour chart, okay? But in this case, what we are seeing is bullish divergence playing out on the weekly chart. So that's very encouraging and something for you guys to keep an eye on. This is another chart that I've spoken to in the past. I haven't spoken to it in a little bit. This is the Williams Alligator. This is the ADX and DI. Really the key takeaway, and I like looking at this on a line chart instead of a candlestick formation on Bitcoin. This is a weekly view, okay, on Bitcoin. But essentially what happens is when you get this green line above this dotted trigger line at 20, this is our trigger line, okay, the dotted horizontal line at 20. When the green is above the 20, and the red is below the 20, that's our trigger signal. You can see each time the blue circles and the red arrows up are denoting massive breakouts in the price, right? So right now, we're sort of neutral. You can see that both lines are just sort of going horizontal. We're waiting for a decision. Does the green want to break up, or does the green want to continue drifting down and the red want to break up as well, or does it want to go down? We want the red to go down. We want the green to go up. So this is just something to keep an eye on. Historically, again, when the green goes above our trigger line above the 20 and the red also crosses below the 20, this is bullish for price. So something to keep an eye on. Now here's something that I want to point out on this chart, this is the weekly Bitcoin chart. And again, this sort of sets the stage for some of the commentary I have in terms of expectations going into next year. Okay, we have to be realistic, right? So what's happening here? Well, we're in a downwards, even though we have bullish RSI, right, that I just showed you, we're in this downwards, we're creating lower highs. We're creating lower highs and lower lows, okay? Those are the basic building blocks of a bearish narrative, okay? Not what we like to see as bulls, okay? So realistically, okay, even though this week closed green, and that's encouraging to see, that doesn't mean jack shit to me. This candle close means jack shit to me. And why do I say that? Well, because of this. It's very, very simple, okay? And again, we have to, when we're evaluating these charts, we have to evaluate them unemotionally. You can't interject your emotion one way or the other. That is the biggest way that you will make mistakes, okay? If you're interjecting biases via emotions, because we're all human and we have emotions to us, if you interject emotion into this chart or any chart, you are going to fuck up big time. I promise you that. So let's look at this unbiasedly, unemotionally, and just ask us what this chart is saying. Well, I have a high here and a lower high here. So the reason that I say that, as nice as this close was, and it's green and it has a thick body to it, look how much below this line we are right here. Okay, we have a thick red candle that we need to get above. I'm not starting to feel any sense of shorter to midterm bullish until we get up above this area, which it looks like is above essentially 21,000. I want to get above 21,000 to 21,500. Once we get above 21,000, 21,500, the next area is this area. This is our next lower high. And this area is up towards 25,000. So guys, you know, as nice as it is to see one green candle, you could absolutely, it's not even an argument. I want to be clear about this. This is nothing more than a dead cat bounce until we start to clear 21 and ultimately 25,000. This price action does nothing for me. I want to see volume come in, and I want to get above 20. We're going to call it 21.5. I want to first get above 21.5 thousand. Once we get a close, I'm not talking about a candle body wick. I'm talking about a weekly close. Weekly close above 21,500. Okay, we can start to get a little excited in the shorter term, but we still have a lot more work to do. We've got to get above 25,000. These are our first two steps. Let's get above 21.5 and then 25,000. Once we start getting candle body closes above 25,000, let's have a conversation, because now we're starting to entertain the likely possibility that we're going to start pushing up towards 30,000, which would be very big for us, okay? So we have to remain patient. Again, if someone that you're listening to on YouTube, by the way, hit the thumbs up button, guys. Appreciate the support. If you're listening to another technical analyst on YouTube, or you're reading commentary on Twitter, and they are calling this a dead cat bounce, guys, you can't argue anything other than that until we start to close above these bearish lower highs. We need to start creating a low, a high, which breaks this one, then a higher low, okay? Then break out to above 25,000, negating this, negating that, okay? Create another lower high. What's happening? We're getting higher highs, right? Higher highs and higher lows, okay? So that's what I would really focus on the weekly, okay? Those are the things I would focus on the USD weekly for Bitcoin. Now, obviously, the USD chart for Bitcoin is not the only chart that we can look at, right? Let's take a look at Ethereum, because Ethereum is the king altcoin. It's held the number 2 position for an extremely long period of time. Not too much has changed here, okay? Now, it is good. When we got this weekly candle close, we pushed above this line right here around 1,200. That is bullish to see. We're sitting at 1,271. It's good this prior week to see Ethereum hit above 1,200 and stay above it. Now what we need to do is get back above the 200 simple moving average on the weekly and push above around this $1,400 level, okay, this big red area. So we have a lot of price confluence right up in here, okay? The 200 SMA is at 1,350. I have a thick area of resistance right around 1,400. Okay. Now we know, if you've been subscribed here for a while, you guys know once you break down below a moving average, it acts as resistance. If you're above it, it acts as support. So this is going to act as resistance, the 200 SMA, and we also have $1,400 region that's going to act as resistance. Once price on the weekly pushes above here and stays above this area, it looks like it's at I have it at 1420. Once we push above and stay above 1420, we can feel cautiously optimistic. But again, it's the same story as Bitcoin, okay? Same story. What do we have here? We have a high, a lower high, and a lower high. So ultimately, we need to start to push price above and close above the lower highs. The first lower high I see here is at about 1680. So once we start pushing above 1420, look for 1680, and then we can start to have a conversation. You can see we also have resistance up here around 1800. So we should once we clear 1420, we should start to see some resistance between 1680 and 1800. I would expect that. All right, Ethereum BTC. Now, this is one of these charts we've hit on quite a bit. This is on a monthly view. Nothing here has changed substantially, okay? Substantially, nothing has changed. You can see again, and this is why we, as chartists and as unbiased investors in the space to assess how things are performing, we have to assess various charts, right? We have to look at the USD Bitcoin. We have to look at the Ethereum USD. We also have to look at Ethereum's strength relative to Bitcoin. Nothing has changed. We have price consolidation. Nothing from prior weeks' commentary has changed. And to be quite honest with you guys, and I was just having this conversation with someone, this is one of the hardest reasons that if I'm really coming out here and I'm presenting you with valuable content, and not filling it with fluff and just putting out a video to put out a video, which I never do, it's very hard to speak about something that is engaging and interesting and informative right now in the market, because it's just so fucking boring, to be honest with you. A lot of these charts, nothing has changed. Nothing substantial has gone on. It's a lot easier to come out here and create content if there's a lot of excitement, kind of either way. If there's a lot of upwards momentum or downwards momentum, there's a lot to talk about. But right now, price is just consolidating. There's nothing new in this chart. But it is encouraging as a bull, because one of the things that I've spoken to in this chart, this consolidation leaves me feeling convicted still that we're at a point in the cycle. What's up, Holly? Glad to see you made it. We're at a point in the cycle where we should expect in the coming weeks and months for prices to enter a new leg at some point here in the not too distant future up, okay? Else, if we were really expecting massive drops down, we should see that we should have seen this start to break down, and it's not. So this is very encouraging to see. Let's look at the Bitcoin dominance again, guys. Just, I can't speak to this enough. This is a basic premise in charting. I mean, we've hit this area now one distinctive time, 2, 3, 4, and 5 distinctive points in time. Look, it's just a basic premise in technical analysis. The more that we've hit this region here, the more likely it is, not certain, but the more likely it is it's going to break down. We'll also have a massive bear pennant. So the fact that Bitcoin dominance, and this is on the weekly, has a high likelihood of breaking down and depreciating in value a lot, this is a very, very good sign for the market, because historically what this means, okay, over the coming months, is that both Bitcoin and altcoins will appreciate massively in value, okay, and altcoins will outpace Bitcoin by a large margin, okay? So again, nothing has changed here. We've bounced for the 5th consecutive time. I am expecting this thing to break down in the coming weeks. Dollar index, I put out an entire video dedicated to this, and I actually spoke to this chart. Without going, you can check out that video. I want to say that, go to my channel real quick here. I just put out a video, actually, when I was up in northern Florida. It's DXY is screaming to Bitcoin and crypto. I put this out on November 30th. Go check that out. It doesn't have a ton of views. Go check it out. But I basically spoke to this chart, and I'm not going to regurgitate the same things that I said in that chart. You can watch the video. But the one thing I would say here is there's a clear breakdown in the dollar index. And one of the things I explained in the video is there's just a lag in recognition to when that historically has shown up in crypto. But this massive breakdown that the DXY has seen and the break of this parabola has historically meant, okay, even if it's taking several weeks to catch up, the narrative is taking several weeks to catch up. It historically has meant that crypto and equities have appreciated significantly in value. So this is just something to keep an eye on. Nothing significantly has changed. Let's actually look at the weekly close. Look at these two red candles. This is our current candle here. Let's get off the price indicators. This green candle is our current week's worth of price action. It's only a couple days. But this is a very bearish candle for DXY and very bullish for crypto. So just continue to keep an eye on this. That 104 to 105, unsurprisingly, as I've spoken to in the past, is providing temporary support. Once that breaks down, I anticipate the dollar going right towards that 101 to 100 level. So we'll have to keep an eye on that. Okay, this is the total 2. I wanted to take a look at the total 2 with you. Let's first look at the weekly. This is the 2-week. Okay. Nothing significantly has changed. The weekly candlestick that we just got now, for your benefit if you're not familiar, the total 2 is the entire cryptocurrency market cap stripping out Bitcoin. So what that means is it's the market capitalization for all altcoins, okay? Now what's good to see with this green candle is we got out of this golden zone here and closed above this green area, which is 474. Okay, that's now an area of support. We closed above it, okay? So that's encouraging to see. The other thing that I wanted to show you, if we zoom out and look at a higher time frame here on a 2-week chart, nothing has changed with this falling wedge. Okay, nothing has changed with this falling wedge. And you could actually argue that this is a bull pennant. Here's the pennant, and then here's the pole. This is the pole, and this is the pennant. And I got to tell you guys, as much as frustrating as this correction has been, let's take a moment to speak to this before we take a look at the S&P chart. We're going to take a look at the S&P chart, and there's a good reason we're going to take a look at it. I want to remind you of something because I think it's very easy to forget these things. And so I'm going to be your friendly reminder, okay? When we were entering this parabolic phase right here in the markets, okay, and Bitcoin went up to 64 and eventually 69, okay, and you had the Holy Crypto Trinity, and they were running very, very hard and going up massively in value, and everyone loved my tweets. Okay, and everybody else's tweets. Everybody's sentiment if you go back and you read tweets during this phase, crypto was never going through a massive correction again. It was never going through a massive correction again. Bitcoin was going through a super cycle. It had a minimum price target of $200,000 before the end of 2021, okay? Everyone was really riding high on that narrative, okay? I remember commenting to people on Twitter that they were delusional if they thought Bitcoin would never undergo a massive correction again. But these are the emotions. These are the emotions that fit within a euphoric narrative when everything is just going so high. Everyone just thinks everyone's on the train and it's never going to run out of steam. And they come up with astronomical price targets that are probably not likely, right? You have the exact opposite going on right now. This correction, this essentially was a double top, okay? If you believe the Elliott wave structure that exists within this formation right here, which is still valid, this is essentially an expanded flat correction, okay? An ABC expanded flat correction, which I've spoken to in the past. And we essentially double topped, okay? But once we topped here, after we started correcting, okay, and this has been more than a year of correcting. The market has been correcting more than a year. Far few people like my tweets, I can tell you that. Social engagement has been down and dwindling. And the other thing to be mindful of is people have become so sour on the market, that instead of during this time period right in here, okay, when things would never go down again, okay, now in here, listen to the messaging that's out there. Things will never go up again. I see Bitcoin maximalists saying there'll never be another altcoin cycle. Bitcoin's just going to take over, and this is where all altcoins die. Bullshit narratives that, make no sense based on the charts and based on so many other countless things. It makes no sense. It's just it's the state of the emotion of the market, Now no one thinks the market's going up again and Bitcoin is going to sub $10,000. This is the emotion of the market, and I feel those people are delusional. Bitcoin's going to undergo another bull market. Bitcoin most likely will not be hitting less than $10,000. There are crazy price targets being placed out there. Nothing in the charts that I'm looking at suggests that as a likely scenario. But again, the emotion that existed over here, the heightened state of emotion, is the same emotion that exists here. It's just in the opposite direction. Just be mindful of that. Okay, be mindful of that. You have to remove emotion from your investment thesis, else it will skew your vision and you will make horrible mistakes. Okay, so nothing in the big picture here has changed. Now let's look at the S&P. Now you want to hang around for this because what I want to do, and I want to spend a little bit more time evaluating these two charts with what I'm about to say, but I want to look at the S&P. And then I want to look at the Dow Jones, and I had an interesting conclusion or an interesting observation that I reached once I evaluated the Dow Jones right before going live. Now, the S&P, if you go back to prior live stream videos, I had spoken to the kiss of death, and we're not going to go over what the kiss of death is again. But you can go back to prior videos to catch up on that, or you can, you can go on YouTube and look up what is the kiss of death, S&P. Alessio Rastani does a great job explaining it, okay? And shortly after he put out that video, I put out my own video giving credit to him and also expanding upon his analysis and kind of walking through things on a live stream. But the point is, when we look at this 2-week chart of the S&P, there's a couple key things that I want to point out to you, okay? First off, this blue line, which is the 21 exponential moving average, it's the 21 EMA. This is a critical line historically in the history of the S&P. We want price to get above this blue line. We also have descending resistance, right? These are the basic building blocks of a bearish narrative. Look what's happening. High, lower high, lower high, lower high. There's a few observations we can take from this chart. Okay, a couple of key observations. First off, we have lower highs coming in. We need price, okay? We need price to come up and break 43.25. This was our prior lower high. If the S&P can break with a close, I'm not talking about a 2-week candlestick that wicks up to it and closes below it. I'm talking about a candle body close above 43.25. We can feel with conviction that it is more likely that the S&P is going to test prior all-time highs and break. As crazy as that sounds at around $4,800 level, there is a very high likelihood if we can get a close above 43.25 that we're going to continue pushing higher in the S&P and break 4,800. So that's one thing to watch for. The other thing is, look what happens. Every time we've closed below, okay, we've gotten below the 21 EMA, we've sort of temporarily gotten above it and gotten down. Temporarily gotten above it and pushed down. Temporarily got above it. Now, are we going to push down again? So that's something to keep in mind. Another observation. And the other observation that coincides with my first observation about the lower highs, we have this black descending line of resistance. We need to push above there. Ultimately, the most important thing to keep an eye on is 43.25, but there's those 3 observations that I wanted you guys to be mindful of. I guess there's one last observation, a fourth observation. If we roll over, what's up, Brian? Glad to have you. If we roll over and we come back down to this green area, it has an increased likelihood of breaking. Why is that? If you go back to this chart, what did I say? Prior areas of support, when they are touched multiple times, they weaken. I've hit on that so many times on this channel. If we keep hitting a prior area of support, it weakens and has a higher likelihood of breaking to the downside and then becoming resistance. That's what's going to happen here. If the S&P rolls over and starts entertaining, it looks like right around 3,600. If you wake up and see the S&P around 3,600, I'm saying it's not a good thing. It's not a good thing because while it's not a certainty, there's a higher likelihood this floor will break and we will come down. And I could see it coming as far down as levels right around the 200 SMA, okay, which is sitting right now at 3,000. Okay, so we do not want to come down to 3,600. We really want to try to stay up in this area and ultimately push towards 43.25 and get a close above there. Watch that. Now, here's an interesting observation I had prior to going live, and thank you for everyone tuning in. I appreciate the thumbs up and the support. It really does help the channel. Here's the interesting observation I had right before tuning into this channel. I hadn't looked at the Dow Jones, honestly, in maybe like 2 weeks or so. Look what's happened here. This, similar to the S&P, we have lower highs, downward resistance. We can't get above it, right? Look what just happened. We pushed above it. Now, typically in these situations, what happens is once we break a descending area of resistance here, okay, we've seen this on many charts. If you've been here for a while, we've taken a look at this. We break the resistance, we come down, we back test it, and then we continue to move up. Is it possible, and I don't know without studying history, maybe this is another video I can put out and speak to in a later video, is it possible that the DJI, the Dow Jones Industrial Average on the 2-week, is giving us a clue, okay? It's a leading indicator and it's giving us a clue in terms of what is in store for the S&P. Is the Dow Jones front-running the S&P? I do not know the answer to that question at the moment, but it is an interesting observation that what we want to see happen on this chart, we want this resistance to break and we want to push up and break 43.25. We're starting to get some of that bullish momentum on the Dow Jones. So it is possible, and I'll have to study the charts to ascertain this, it is possible that the Dow Jones is beginning to give us clues and sort of front run the S&P in terms of what's going to happen with the S&P. Because look what happened here. You see this high or low here? Okay. Excuse me. You see the lower high right here? Okay. We just closed above it. You can see, and this week has yet to close, so I wouldn't focus on this 2-week candlestick. This closes, I mean, this candlestick just opened. Okay, this candlestick just opened. But you can see this close. Look where we closed at. We closed right here. This candlestick closed right up here. This closed at 34,400, right around 34,400. It's well above this area right there, right? At about 33.5. Let me make that a different color so you can see it clearer. This green line is well above the orange line. 34.4 is well above 33.7. So that's what we want to see. We've started to negate the lower highs on the Dow. So again, is that giving us a clue as to what could potentially come in the S&P? Something to keep an eye on, something I promise you that I will be researching this week, and potential idea for another video to kind of examine history. Now, the reason that we want to, and I only have a couple charts to go over, and I'm going to open it up to Q&A. Welcome in, Hugo. It's good to see you, brother. Now, the reason that we focus on the S&P and the Dow Jones is because crypto is related to the performance of the equity market. They are not two separate entities that move in two separate directions. They have general price direction that is similar in nature in terms of moving up and down. Does that make sense? So, meaning, let me give you an example. If we start to see a turnaround in the S&P and the Dow Jones, okay, and for example, the S&P starts to break 43.25 with conviction, the Dow Jones, maybe we get a pullback here, but then we start to come up here and we break this, and we're coming up here and we're breaking this lower high here. Okay, this is telling us with conviction that if we haven't already seen a turnaround in crypto, which we likely at that point would have already seen it, we can expect it because they are positively correlated in that sense. Okay, so that's why you want to keep an eye on the S&P and the Dow Jones. Last charts that I want to go over, this is something that I just tweeted out today, okay? I tweeted out several days ago, but UMA was having a very large move. This is the UMA BTC relativity chart. It's just something I want you guys to keep an eye on. Keep it on your radar. This pattern, does it not look the same, extremely similar to this pattern? Band Protocol was one of those projects that I had been tweeting about and sharing with people that it looked like it could potentially have a massive breakout based on this chart and based on this chart, and I spoke to it in the past. Now, this chart right here, this is a falling wedge with a fake out and then an ultimate break up, right? Does it not look similar to this? Falling wedge, fake out, and looks like we're just starting to break out on this 2-week candlestick that just printed. It is something to keep an eye on. Something else to keep an eye on, look at this massive bullish divergence. Price is going down and the RSI has been doing nothing but increasing. Now, I will tell you price levels I am personally looking for on UMA if it has a true breakout, okay, which is looking increasingly likely based on the price action that we were seeing today, up over 20% at one point. Band protocol, when it broke out of its falling wedge here, okay, and it also had bullish divergence, when it broke out of its falling wedge, it hit all the way up towards the 0.382 fib retracement level, and it actually wicked above it, okay, it got up to nearly $4, and this is at $3.30, okay? If we see a similar move, and this is sort of what I'm targeting, okay, we see a falling wedge here. If we see a similar move, we could see UMA exceed $5.50. Okay, we could see it, push up. We're at $1.95 right now, push up, towards $6. That's like a 3x, okay? That's something I'm going to be keeping an eye on. It's something I want you guys to keep an eye on. Full disclosure, I've had now for a couple weeks, I've had a shorter term swing trade play in this project, and it's something that I'm watching for. So we'll assess it weeks out by now. So with that being said, Devin says check RSR and compare it to ZIL. What do you mean by RSR, by the way? I am familiar with ZIL, the project. I just don't know what you mean by RSR. RSR, relative strength. I know RSI. I don't know what you mean by RSR. Sorry, Devin. Can you elaborate there? I'd be happy to take a look at it with you. I'm not sure what you mean. Do you mean on the UMA USD chart, or do you mean on the UMA USD chart, or on the UMA BTC chart? I'm assuming you mean the UMA USD chart. Okay, so we are at the point of the video, as always, where I like to take questions. So if there's any chart that I covered that I didn't explain well and you have questions on, something wasn't clear, feel free to ask. If you have something you want me to pull up in chart, I'll chart anything you want me to chart. We'll take a look at it together. Don't let me leave too much awkward silence here. Is there anything that anyone would like me to chart? One of the things is I'm waiting. Oh, reserve rights token. RSR. Ian, thanks for clarifying Devin's comment. I'm not... Okay, so RSR is a project, not a price indicator. I just wasn't getting the question. Sorry. One of the things I'm going to try to change up on these live streams, I don't know about the happy hour, though. The happy hour is more free-flowing. I kind of want the happy hour to go as long as however the happy hour goes. But in terms of doing a lot of these live streams where it's strictly TA and we're taking questions, I'm going to try and keep these things shorter. I've been running over an hour, easy, on these live streams. I'm going to try to keep these things to closer to 40 minutes. We're already at like 33 minutes. So I'm going to try to keep it more towards 40 minutes. Especially those people who go back and watch these videos, I want it to be a little bit more meaningful for them. And they don't have a super long video. All right, so it looks like the first question, welcome in, Excedre. Let's take a look at RSR. So Devin, it sounds like Devin believes he's bringing something to our attention that could provide something valuable to the audience, and I'm all for that, for everyone here, including myself as well. Let's take a look at it. So what is it, RSR? I'm not familiar with this project, so bear with me. I apologize. Is this on any U.S. exchange? I see it on KuCoin. It doesn't look like it's on any U.S. exchange. Or at least many. See it on KuCoin. All right. So let's pull up RSR, USDT. Okay. And let's pull up... ZIL. Do I have ZIL? I don't. Thank you for everyone new tuning in. Make sure to hit the thumbs up button. Drop me a TA question if you have one. So let's take a look at ZIL. So the question here is, compare RSR to ZIL. RSR and ZIL. I think RSR might have massive move to the upside like ZIL did in the past. All right, so ZIL here we can see. Let's put this on a weekly, actually. It's condensed price action a little bit on ZIL. You can see we had a massive move up here. After we had corrected in March of 20, beer virus, we moved up from about 1/3 of a cent to, we moved up from 1/3 of a cent to 25 cents. I know Harmony One had a much larger move. Harmony One went up. Harmony One, I want to say it moved from around 1/3 of a cent to, moved up to 40 cents. So it had a larger move, but, you know, let's still take a look at this one and see what's going on. I know ZIL was a large mover. You're seeing something similar to ZIL. First glance, I didn't see something that stuck out to me, but I don't really. I don't see something similar to ZIL. Not really. I don't see anything that really sticks out to me similar to ZIL. I mean, this pattern here is sort of reminiscent to this pattern here. But instead of focusing on, and maybe there's something you can point out to me and you can actually share on Twitter, and it'll be easier. You know, if there was a way to screen share with you, Devin, I would do that so that you could actually show me what you're looking at. But maybe, you know, if you're on Twitter, maybe you could, you don't have to DM me. You can just share something with me publicly, or you can DM me and we can chit chat that way about what you're seeing that I'm not seeing. But how about this? Let's not focus on the comparison to ZIL. Let's not do that. Let's actually just take a look at RSR and let's ask the question, could we see a large move here? Is there anything leading us to conclude that that's possible? Stochastic RSI, MACD, okay, nothing too crazy. I'm looking for bullish divergence on the RSI. That's what, and there's a common theme here. A lot of the charts that I've been sharing with you guys and I've spoken to, there's bullish divergence on the RSI. It's a common theme. So do we see that here? We absolutely do. So you can see the RSI is steadily increasing in value as price has been going down. Okay, so we do see bullish divergence on the RSI. Now, are there any technical patterns presenting themselves in this chart that are bullish? Okay, because Devin feels this thing is going to break out. Is there a falling wedge? Because at first glance, it looks like there could be a potential falling wedge. I don't see that either. Well, there could be a broadening wedge. Yeah, I don't see that either. Let's go to some Heikin Ashi candles, see if that changes our view. It doesn't. Let's go to regular candlesticks. Let's take a look at a 3-day view. Perhaps that changes our view. Now, the other thing I'm not getting, well, either way, Devin, even if it's not your idea, point me at some point to the person who pointed this out. I just don't, and again, I'm taking, 10 seconds to glance at it with you live, but I don't see it readily. Not studying it super close, but didn't see anything right away. And maybe in the shorter term, I don't know if you're looking for a shorter term breakout, because I don't see a larger pattern presenting itself. I mean, there's bullish divergence here for sure. You can see the RSI is increasing even though price is going down. But I really don't see anything super striking about this project. Here's a 2-week view. Yeah, I'm trying to look for some sort of pattern to help you out here, brother, but I don't see anything. Again, and maybe this person is suggesting a shorter term swing trade play. Yeah, nothing here is striking out to me. I don't see, or nothing here is sticking out to me with this project that suggests a very large move incoming. Sorry, I don't see anything there. All right. What other questions do we have here? Adam. Somebody wants me to take a look at Adam. You know, I haven't taken a look at that one in a while. Good call. I remember looking at this when it was very bullish. We had this sort of ascending triangle, and we have since broken down. So the first thing I would point out, I would extend this line over. Okay, we've broken through it. So what do? We're going to turn that into resistance. That's the first thing I would do. All right. We've come down. Not surprising that we've backtested this area. Okay, we've backtested this area as support. That's not surprising because we have a zone right around here. You could draw it here. You could draw. I kind of like it right there, to be honest. Now, the other thing I would look at is from a fib retracement level, did we backtest? If this was our ultimate move up and we're going to come back down. Yeah, our 0.618 is at 8.54 and we went down as low as 871. So right around the 0.618 golden pocket right there, from the bottom to the top. So could be some additional downside in store, closer to 8.5. Okay. So what would I look for on Zill? I'm going to keep this very simple. We have a downwards area, a downward sloping line of resistance, very similar to a lot of charts we see, okay? We have a high and a lower high. We also have this resistance right here. We broke through that that support, and it's now resistance at about 1240. So what we need to see from Adam is we need to break 1240. Once we break 1240, let's break this lower high area, okay? This lower high area, it looks like it's at about 1580. So we need to get up. Let's break 1250. We'll call it 1250, not 12, well, 12. We'll call it 1250. That's easier to remember. We're splitting hairs, 1250, 1240. Let's break 1250. Let's come up. Let's negate this lower high at about 1580, okay? So this is the general direction of price that I'd want to see. Come up, break this area here. Come up, break the descending resistance. Come up, break 1580, maybe back test to support here, and come up and break this area. That's what I would be looking for. I hope you found that helpful. Wait, who asked that question? Brian, I hope you found that helpful. Devin, I'll take a look at it a little later. It's a harmonic. Yeah, I'm not familiar with harmonics. I'll take a look at it a little later. I appreciate you pointing it out. I'll probably take a look at it tomorrow at like 5:30 in the morning when I get up. But I'll come back to the commentary and take a look. Thank you for pointing it out. And if I find something of value that you're sharing, I'll bring it up on this weekend's live stream, either Sunday or Monday when I do the weekly close. What else do we have here? YC says, with BTC grinding sideways, what do you think will get us to your target you mentioned earlier? Which target are you talking about? 21. So I'm assuming you mean 21.5 or 25,000, really, negating some of those lower highs. That's what I'm assuming you're referring to. With BTC grinding sideways, what do you think will get us to our target? If you've been here for a long time, you should know this. There is no news narrative that's going to get us to our target. I don't believe that the news is what we wait for. I don't think that we're waiting to hear that Apple is investing in Bitcoin. I don't think that's what we're waiting for. What we are waiting for confirmation on, and where we have to be patient. This is a great example here. This is bullish divergence on the RSI. So ultimately, if we see a spike up in price here this week or next week or the following week, okay, and we see a big green candle, that's not because of some news event. It's because the whole time the RSI has been increasing. Seller exhaustion has been coming in, even though price has been declining. And ultimately, there's going to be a big giant leap in price. It's not a certainty. It's just this chart is telling me there's a high likelihood of that. So I'm not waiting for anything per se in particular. I'm just waiting. I'm just being patient and allowing the charts to tell the story. Hopefully that makes sense. Albit is ready to go, huh? Let's take a look at it. I've had a few people in here comment about Albit. Let's see what's happened. Oh, 120 to 160. I'll talk to that in a second. Glad you're paying attention to see that I said 120 to 160 target for Bitcoin next year. Glad to see you're paying attention. So with Albit, this is the general price direction. Last time I charted this for you guys that I was looking for. And up until this point, it's exactly what we got. Now, we fell back below this descending line, which is not what you want to obviously see. So, ultimately, I'm okay with this so long as we respect this low here. We had a low at 3.68 cents, okay? 3.68 cents. So I just don't want to go below 3.68 cents, all right? Now, even though we got back below this descending line of resistance, we've now gotten back above it. So the most bullish case scenario that I could see for this is we respect the descending line of resistance right here and continue pushing right back up into this red zone here between 8.6 to 10 cents, okay? So let's just remain patient. Let's see if we push back up into 8.6 to 10 cents. If we do, I have other areas of resistance drawn here. There's a big gap between 10 and 20 cents. So if we break 10 cents with conviction, there's a strong possibility we could get a blue sky breakout and double in price towards 20 cents. Ultimately, again, downside. We just don't want to break this level here at 3.68 cents. Hope you found that helpful. Now, let me speak because I didn't interpret the question right from YC. And I love the trolls who obviously don't pay any attention to content I put out. I tweet something out there, and of course, someone without knowing my content says that I'm a moon boy and that I am just tweeting random price targets out. So the 120 to 160 price range is something I have spoken to in the past. I can think about maybe next week bringing up some charts that kind of speak to that specifically. But your question is, what will get us there? Let me tell you what will get us to the 120 to 160. What will get us to the 120 to 160 is two things. One, for the Elliott wave structure to not be invalidated, okay, for that wave 5 movement to come in next year, okay? So ultimately, for that structure to pan out, I'm not incorrect in stating there's still a fifth impulse wave, and for that wave to play out next year. Okay, so that's the first thing that's going to get us there. It's just purely TA driven. And the second thing is, in terms of where we fall in that range, I mean, this is where when you look back on some of these price targets that a lot of altcoins and Bitcoin itself ultimately reached, when we are in a state of euphoria, okay? And let me use the state of euphoria in both to the upside and downside. To the downside, it really wouldn't be euphoria. It would more so be being scared, right? Prices, when they're in a state of euphoria, have a tendency to exceed levels that we think are possible based on technicals. The technicals still speak to it, but they're going to much higher levels than we thought were possible. And to the downside, we can often wick and go lower than we thought was possible to the downside. I know myself was caught off guard with the extent of the correction, right? So I think to some degree, to answer your question, what's going to get us to that range, I think the degree to which we hit the lower or upper end of that will be the degree of euphoria which exists in the market. That euphoria is baked into these charts. Human emotions, everything that exists is baked into the price data. The price data reflects all that stuff. It reflects bots and algorithms and human behavior, sentiment. Everything is baked into those charts. So the higher the degree of euphoria that exists in the market, the more likely it is that we push to the higher range of what I've indicated. What else we got here? I'll take a couple more questions, then I think we're going to call it an evening because I see we're pushing up against nearly 50 minutes. Like I said, I wanted to try to keep these lower in time. Track Heaters asked me to chart Cardano. Absolutely, I can track Cardano. I would be happy to. So Cardano is one that I have taken a look at recently. And why under ADA is Bitcoin dominance coming up? Interesting. Okay, so this is Cardano. Now, I had spoken to a few things on Cardano. If you hold Cardano, these, in my opinion, are the most important things to pay attention to. The first thing for Cardano to pay attention to is this level of support at around, we're going to call it 30 cents. You do not want to see Cardano get a candle body close, not a wick, a candle body close below 30 cents. If it gets a candle body close below 30 cents, there's not a certainty, there are no certainties in charting, but there is a high likelihood that we could see a capitulation in price towards 20 cents, because that's the next major area of support that I see when I go back in time. You could even draw this a little lower based on this time frame. But this, based on the time frames I looked at, and I'm sure I took a look at this on a more granular level, maybe on like a 3-day. You're welcome, YC. On a 3-day, that's not, maybe it's just my imagination, but that picture doesn't look good that I have drawn. My head is in, I have a dirty, dirty mind. All right. So, but the first thing that I would pay attention to in the Cardano chart is where the weekly candle bodies exist. We do not want to start to see candle bodies, or even on the daily for that matter. I shouldn't just say the weekly. This is weekly. We don't want to see candle bodies come in and start to close below 30, because if it does, it increases the likelihood we could see some sort of capitulation event towards 20 cents. Okay? So that's point number one. Point number two is, what is the price pattern that is drawn out here? This, who asked the question? Sorry, track. This track is a falling wedge, okay? And that is a bullish formation. So we'll have to watch this price action here to see if the falling wedge plays out. And I'm trying to remember if there's any bullish divergence. There is. There is a slight amount. Let's see if there's bullish divergence here. There's not a lot. 30, 32. There's a small amount of bullish divergence on the weekly, which is good to see. I'd like to see it a little stronger. Now, I'm being honest in my assessment here. Something I spoke to a couple weeks ago is Cardano has been one of the weaker performers in the past several weeks, okay? It's not showing me a lot to feel super excited about. There is, now if we go to a 3-day, there is more clear signs of bullish divergence, so that's good to see. Back here, the RSI was 24. Up here, it's in the 30s and even the 40s. So that's good to see. Okay, so even though price is going down, the RSI is going up. Okay, so in the smaller time frames, looking at the 3-day, we do see more bullish divergence here. That's encouraging. Now, what would I watch for when we do get a bounce? Because at some point, we are going to get a significant bounce in Cardano. First off, what I would watch for is for this first red line of resistance at 35 cents, we'll call it, and then at 40 cents, 40 to 41 cents. So look for 35 and around 40 to 41 cents. Then check out this descending area of resistance. High, lower high, lower high. So any bounce, once we come up really into this zone, depending, and really it depends what week, right? If we bounce here, we're going to face the resistance here. If we bounce here, we're going to face the resistance here, right? So it depends what week we bounce. But there's a whole lot of resistance right in, I mean, essentially what I would take away from this is there's a whole lot of resistance between 35 and 41 cents. Once we clear 41 cents with conviction and a candle body close on any time frame, okay, on a daily, 3-day, whatever, once we clear 41 cents with conviction and get a close above it, now let's have a conversation. Let's revisit this chart and have a conversation. Other areas of resistance between 41 and 85 cents. Because there's other areas in here. I just haven't drawn them out. So that's what I would watch for. I hope you found that helpful, track. I will take one more question if there is one. Else, I'm going to get going. Smudger, glad to see you here, brother. So I will chart one of these. A quick analysis on A0 and MLT. Sorry, I'm just not trying. I'm trying to keep the live streams a little bit shorter. We're pushing an hour almost here. I'll take a look at A0 with you because I know that Nick speaks a lot about that project. I know that I've seen other influencers speak to this project, and I haven't researched it. I know it's just one of those ones I just haven't had time. The past couple weeks for me in general have been very busy. Now I haven't had time to research this. I feel like I haven't had time to do a lot of things. But I know this is one we've looked at in the past. You can see that we certainly have. Wow. Okay. There's been a lot that's happened here. Holy shit. This is on a daily. Wow, we looked at it all the way back here in October. That's crazy. Time flies, guys. Time flies. So yeah, we temporarily broke this resistance. We since got back down below it. Back tested, it moved up. Here's what I would watch for. Let me clean this chart up. This is on a daily for A0. Price right now is sitting at 97 cents. I know at one point I saw it in the 80 cent area back here. So it looks like we cleared that. We have an area of support right around, you know, if I was looking to scale into this thing expecting a pullback, a couple areas I would look for. Again, guys, don't get too cute with these areas of support and resistance. I could draw this line at a few different spots and it would still be accurate. It's subjective where you really want to draw the line to some degree, because I could sit here and draw, I could draw 5 areas of support if I really wanted to, but I'm not, you know, I'm trying to keep this chart stupid simple, right? Paralysis by analysis. So what I would do, okay, we got above this area here. That's good to see. First off, on any potential pullback, okay, and this was Smudger. Smudger asked the question here. So the first thing I would look for on any potential pullback, I would look at some area between 92 cents, okay, really 93 cents, all the way down to 86 cents. Anywhere, this is really, for me, Smudger, this is the golden pocket I would look at, okay? I would look at 93 to 86, you know, and based on your risk reward ratio and your risk tolerance level, you know, you can exercise what areas you'd want to buy back in. Ultimately, you know, I'm fine with this chart so long as we don't go below this level, okay? This is our all-time low, and this was hit at 78 cents. As long as we stay above 78 cents, we're fine. If we start going below 78 cents, we're going to have a bad time. Now, what's next? What's next? Well, the story here is this. We have a high, a lower high, a lower high, and now a lower high. Let's get above here. Okay, that's at $1.05. Let's break $1.05. This is a major area of resistance, so like $1.07. What I want to see from A0, okay, I want to start to break above $1.05, $1.07 with conviction. Okay, once we get above there, you can see I have like $1.13, and then let's have a conversation. I have a thick area of resistance, red resistance in here with lower highs. But let's, you know what? Let's keep it simple. Let's start to break above $1.05 to $1.07 with volume and conviction, and then it looks like around $1.13 is the next area, and then we can have a conversation about what we should be looking for next. So I hope you found that helpful, Smudger. If you haven't already, make sure that you subscribe to the channel and click the bell icon for notifications for more TA videos like this. I should be getting out a few more videos this week. I should have time to do that. And make sure that you hit the thumbs up button. Sorry, I'm getting late in the evening for me. I've been up for a long time today. So anyway, I hope everyone appreciated the content. If you did, make sure to share it with at least one person. Until next time, spread awareness and carry the education forward. Take care, guys and girls.